Hello and welcome back to another day of charting. Today we're going to talk about how the king dollar is on a relentless move higher. As of right now, we can note that the DXY or the dollar is at a level of 102.97. It is on a relentless bid higher, and that is because the US is currently the most hawkish central bank, and what that means is that there's a bid for the dollar, and there is going to be an important policy decision coming up, I believe, this week. And that is going to, this week, it's going to be from the BoJ. The BoJ is going to be here for Thursday, tentative, pre-market. And the reason why this is important is because the US dollar and Japanese yen have been on an opposite decline. We can note that here by looking at USD, JPY, and do we got it? Yeah, we do. The dollar is advanced about 12% versus the yuan in about 2 months. It's broken to a new fresh 52-week high here. And I'm not sure if that's an all-time high. No, it's not. It's pretty close to it, though. So that could be a potential decision maker for us. And that comes out pre-market tomorrow. All right, we also got to talk about Facebook. Facebook is out, and the earnings are not complete trash, right? Surprise. Whoa. Facebook is up by $24 or 13.5% here. Earnings were, they're a beat, but I wouldn't really call them breathtaking. I think that the bar has just been lowered by so much that anything that is not a dumpster fire is being received well. And we can note that here by looking at the heat map, because year to date, let's look at year to date, Facebook was down by 50%. So yes, it is snapping back violently, but as a reminder, Facebook now has to go up 100% to recoup just the year to date losses. So it's an encouraging sign. There's been some technical damage done on the charts though. So congratulations to Mark Zuckerberg and Facebook, right? Nice to see the gains. And just as we noted yesterday, the move from Microsoft actually only really started moving higher after we heard on the earnings call that they were raising the 2022 full year guidance. So looking at the heat map now, let's try to see how we shook out from earnings yesterday. Our key dates were, again, we had Microsoft and Google. We now got Facebook out of the way. So moving forward to the heat map and just trying to understand what's happening. Visa had earnings, MasterCard moving up in sympathy. Energy is still catching a bid. That inflation trade's still there. We heard some headlines from Russia today about Europe and them and maybe shutting down production. There's just a whole mess over there, right? Month 3. Oh my goodness, right? Let's get this over and done with already. Boeing had some bad earnings. Otherwise, the themes are that Netflix continues to go down, so it's not deflated enough. We got Match, Facebook, Google down. But the net effect here is that Google's actually down less than Microsoft was up. So net, Microsoft and Google are basically offsetting each other. That's actually quite positive. Why? Again, roughly equal weight in terms of the S&P, and that's constructive. Looking forward to the rest of the week. Why are these data points important? Well, we told you there's this king dollar, right? This guy just can't go up. He can't stop going up. On the month, we are up by 4.7% here on the dollar. So that means that we have about 5% of pressure, or about 2/3 of S&P's 7.6% decline is coming purely from dollar strength. So if we get a weak or a strong GDP print tomorrow, that is going to really matter. Again, this is going to be the preliminary number for Q1. And again, I'm going to say that I think it's actually going to come in higher. And the reason why I think it's going to come in higher is because, as we've been noting, I can't pull it up easily here. Let me see if I can pull it up on the other window. NASDAQ earnings. This is why. I got the article here now. Here we go. Talked about this on Monday. So a third of the S&P 500s are reporting earnings this week. And what we noted is that a promising 78% of 99 S&P 500 companies that have reported so far have been a beat. That is a beat, and it's easily eclipsed by the historic 66% overachievers of since 1994. And the reason I say this might give us a positive surprise tomorrow is because the bar is just so low. We're sitting here at 1.1% expectations. So anything above that is going to be a beat. What's going to happen? Well, we're probably going to see the dollar up, and we're probably going to see stocks up as well. One of the big concerns for the market right now is just stagflation, which is called a stagnant inflationary environment, where we don't really have GDP growth, but we do have inflation. So this could become a major thorn because as of right now, we note that for GDP, again, a recession is defined by 2 negative quarters of contraction. And when we're coming in red hot from the last quarter at 6.9%, again, we can do a couple of things. Just like with stocks, what can we do? Well, we go up, we go sideways, then we can go down. And that's what's possibly setting up here. 7% could be the peak rate of GDP growth. And when we have inflation at roughly 6% and we have GDP at 7, that's still a net positive effect. Over here, though, we got 1.1 and inflation has been rising. So that might be peak GDP. And what the Fed has to say next Wednesday is going to really matter. So BoJ overnight could affect the dollar, GDP could affect the dollar, and initial jobless claims could also affect the dollar. And the reason why all this matters is because we've done some technical damage, right? We've done some damage. The Bears, scored another touchdown by getting us to monthly lows. If we have a look over here, we can note that, right, let's look at our monthly chart. Our low here so far, 415.01, right? We saved 415 by 1 cent. Yuck. Last month's low, 415.12. Yearly low, 410.64. So we lost last month's low, but we maintained 415. So what does that mean? I don't know, right? I don't know. I'm not Nostradamus. I can't predict the future. What I can tell, though, is that this is a very important level. Why? Well, we talked about it. If we're going to be opening up the new month, all we got to do is dive down below 410, and that's pretty much lights out. So I'm not sure what's going to happen. I don't know what the Fed's going to do. All I know is that it's a critical point on the chart. So whatever the fundamentals are, we cannot ignore the technicals. They're screaming here. And we have to really pay attention to that dollar because being down by 7.6% is very different than if we were only down by 2.5%. If we were only down by 2.5%, we'd be here at about 440, right? That's not really all that bad, but we're not because that dollar just can't stop going up. It is the king. So we're down here by, right, one of the worst months we've had in a while, right? Terrible month, 7.7% decline. And it's not just the S&P, which printed a lower low. QQQ did it too. So here, we didn't just lose the low from March. Again, let's look back through these lows. January low, 334. We've got our February low at 318. Then we got our March low even lower, 317. And now we got the lowest low. So low, lower, lowest. And the reason why this is very concerning to me is because all this dip buying that has happened in the zone from roughly QQQ 363 down to about 317, it's all red. Everyone who bought the dip is red. So if they're going to start selling back to minimize damage, what's that going to mean? We're going to get a self-fulfilling prophecy to the downside. I would love to be wrong about this too. I would love if the dollar would just cool down and stop going up and give us a chance to actually get some relief here. So as we're sitting in after hours, we're here at about 419. And I don't think it's time to celebrate for the Bulls or for the Bears. The Bears are clearly flexing again. We're definitely inside of correction territory. And tomorrow is going to be a critical day. We've got that GDP print, big, bold text. And then after the close, on Thursday, we have Amazon and Apple. So this is very important. And I forgot to mention this at the beginning of the video, but I may or may not have a video out tomorrow. I have to go. I'm moving at the end of the month. I'm moving on Friday. So I got some stuff I need to go figure out. I got to go into the city tomorrow. And I may or may not have a video out. If I don't, I would encourage you to watch the weekend review where we talk about everything you need to know for the week ahead and all the levels and everything are shared on Slack if you need them. Whatever happens, we talked about how we need to get the confirmation into the Friday close. And the confirmation we're getting as of right now is that the Bears are flexing. There's 2 days left, and it's not a lot of time for the Bulls to march us back up. We've got a lot of work to do. So looking here on SPY on the weekly chart, we can note that if we could push back up to green, right, that's asking for how much here, right? We got to go back up by 2%. So yikes, right? We can definitely do it. Right, 420 even seems like a big hurdle. So I don't want to be pessimistic, but we can see that everything that I wanted is turning out to be bearish. We don't have that confirmation until Friday, but right, my spidey senses are tingling. So if that makes sense to you, I encourage you to watch the video, which will queue up here in a moment. And otherwise, I wish you all the best of luck into the rest of this trading week. And we will be on for the Friday close in the final hour. If we don't have that Thursday video, again, we will do the Friday stream. So wish you all the best of luck, and I will see you either tomorrow or on Friday. Thank you.